Hello and welcome to another update video about Solana. On the Solana chart, we are currently looking at this fifth wave to the upside still. Solana extended to my target at 96.50. That was the next target we discussed in the last video and got rejected there in this region here. And we now see this pullback. Shared with you in the last update that we only have basically, since this low that was made here on Monday, we only have 3 waves up, and that it would look better with at least one more high in this wave 5. So yellow wave 5, which could then complete the entire third wave, or in the white count, obviously, this would be the wave 5 of white wave 3, with one more higher low and one more higher high to come. Extension is always possible. As I said to you many times, and also for the new viewers, the approach we take and the approach we have taken in this third wave, which has, in my opinion, been very successful because, you know, support levels didn't break. We're just adjusting our support levels along the way. That's typically a good approach in third waves in general. You can use that approach also for other coins that are moving in a third wave or might be moving in a third wave in the near future. So the main benefit is that micro counting is not so useful necessarily in a third wave. Not that it's not reliable, it can be, it is, but the use of Fibonacci levels and micro support levels is more useful, more reliable. The main benefit is that if people use the micro counts for trading, the risk is that in a strong trend, which we had in a third wave, people tend to try to, let's say, sell at the top of a smaller degree third wave to buy back in a fourth wave. But that because they always extend in third waves, or they tend to extend, it is much more useful just to use micro support to track the trend and then just shift the micro support higher. The micro support levels are always calculated based on the length of the wave and have to be adjusted, obviously, like a trailing stop, you could say. And as long as these levels are holding, the third wave can extend, okay? And we've been doing that for many, many weeks. And so far, these have guided us higher. In my opinion now, due to the fact that we've only seen 3 waves up most recently, I would say one more high is certainly possible here, yeah, and it actually would look better with one more high because I can only see 3 waves up of the last low. Let me explain the structure. There are 2 possibilities I'm observing here. So first of all, obviously we talked about this larger degree third wave, which is still extending, and within this third wave we're dealing with an ending diagonal. And this formed a wave 1, a wave 2, a wave 3, a wave 4. Now we could be in this fifth wave, okay, which is an ABC structure, ABC. Now we've been rejected now at the 1.618 extension level, which is one of the key targets for a C wave, okay? So that's fine, but it's missing a fifth wave. So it's only got, the C wave has 5 waves, but it only shows 3. So it seems reasonable to expect one more high. But it's also reasonable to understand what is the support level that, if broken, means that this pattern might break. And that's at $79.89. I've adjusted it from yesterday's update. That's only a first indication, so that's not confirmation and far away from certainty. But it gives us a first indication that a top of sorts has formed. So if there is one more high, it should start from here somewhere before breaking below 79.89. And that one more high could then complete the larger degree third wave. Or there is one more higher low and one more higher high in the white count. These are 2 possible interpretations that we can look at. And next targets. So the next main level I'm watching for is around about $113. And that is a good overlap with the levels between 108 and 115. So I would pay attention to that range. And then obviously get the wave 4 and the wave 5. So we've got 5 waves up then. That would confirm everything. But, well, one more high or 2 more highs would be my view at the moment. But bear in mind, this entire move is already very extended. So we're just watching the micro support levels until they break. We don't even have an indication that a pullback has started. And I also can't tell you when one starts. As I've said, we need to wait for a signal of the market, and that would be quite an early signal. So yeah, that's sort of the approach here. And then the main support area that should at some point lead to a wave 4. This is now between $41.67 and $65.94. That's the main support area that will be guiding the price in terms of support. Should we finally get that deeper pullback? Yeah, basically, if we get a break below 79.89, it would be an early indication that a top has formed. If we then get a break below $72, yeah, that would confirm that further, and a break below $67.20 even further. And then we are likely in the fourth wave. Then we can detail out the microstructure for this decline. And an ideal target more generally for a fourth wave is typically the 38.2 retracement at $51 that's now. So that always has to be adjusted, of course, with the price. That should give you all the levels really to watch. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. Thanks a lot for watching. Bye-bye.